Okay, we're going to get started now. It looks like we're pretty close to our target count. Again, good morning. My name is Adam Goldstein, the Chief Business Officer of the Federal Home Loan Bank of New York, and we welcome you today. A few notes before we get started. If you have any questions, please submit them at any time through the question box, and they will be answered at the end. We will continue to keep this webinar to the allotted time and respect your schedules. Again, we do appreciate your time today. As a response to the COVID crisis, we have created this weekly webinar series to bring you educated content in this remote working environment. And as always, we're looking to continually enhance the program. So we ask that you please complete the survey, which will come up after the webinar concludes. We value your input and try to cater these sessions to what you, our members, are interested in. We are engaging with you throughout the presentation through a series of polls today. So you can respond by selecting one of the multiple choice answers once the polls go live. We're going to try something new in that regard today, and we'll see how that works out. We will be sending out an email with a recording of this session, as well as a link to the download of the presentation after the webinar concludes. If you're interested in scheduling a one-on-one session on a particular topic or want an economic update from our in-house financial economist, please reach out to your relationship managers for more information. We also encourage you to visit our financial intelligence library, where you can find articles, podcasts, recordings of past webinars, and also we have created a dedicated COVID-19 information page, which is filled with up-to-date announcements. Those announcements are so critical right now because a lot of the relief programs that we're offering are going fairly quickly, as you might expect. I know everybody knows about the 590 dividend. We also have information there about the PPP loans as eligible collateral. We have members starting to pledge. It is operationally burdensome, so we're able to onboard members that are looking to pledge PPP loans, but we request, even if you're not ready right now, you just let us know of your intent so we can add you to the list. The disaster relief funding, there's still several hundred million left. Today's rates, just as an example, if you use that funding on a 3-month advance, instead of 46 basis points, it would be 26 basis points. And on a 6-month advance, instead of 48, it would be 28 basis points. So on the short end, as well as the long end, there's a significant benefit for usage in that program. Our small business recovery program, unless you're calling in from Puerto Rico, where there's 40,000 still available, all 5 million is gone. However, we do request that if you have small businesses in your community that you'd like to sign on, that you still call us and let us know, because we are building a reservation list in the event that the Home Loan Bank allocates more funding for that program. That went in just less than a week. And our Homebuyer Dream program, we allocated $3 million to first-time homebuyers. It was gone in 2 days. And the next opening period is not until July. So it's so important that you stay in touch, and as we allocate a lot of this grant money, that you have access to it as members, and at a time when it's so important to provide funding and liquidity to our communities that we all serve. We're trying to do our best, but keep us posted as to what's on your mind so we can make sure we add you to the list. I'd now like to introduce Deloitte. We're trying something different here, as I mentioned. We wanted to bring thought leaders to continue the discussion around PPP. And frankly, that's all we've been hearing from our members. PPP is the hot topic on the surveys from previous webinars that our members have submitted as well. We have a business relationship with Deloitte for some time now. They've been aiding us in our technological renaissance that we're going through as a bank. I feel like it's a couple of years, but we'll find out from one of our speakers in a minute. Through my conversations with that particular speaker and our point person at Deloitte, Sunil Kapoor, the topic of PPP keeps coming up. I mentioned to Sunil that in our conversations with members, we're shifting a little. We're still only talking about PPP for the most part, but we're shifting away from the 2 waves of originations that we've had to really reporting. And since the rules are changing, trying to understand what those rules are, and members could really use some help in the next phase with determining forgiveness, and again, more on the reporting. Through their networks, they've had a lot of discussions with the institutions that they work with, big and small, all across the country, and have built a really strong narrative around this next phase of PPP, and also came up with some solutions that we thought were pretty interesting. So Just a quick word on those solutions, and I'm required to say so, just a brief legal disclosure that the solutions presented at the back end of the presentation is not an endorsement from the FHLBNY, quote unquote. But I do feel strongly that they are thought leaders and have a lot of value to add. I thought it would be appropriate for you all to hear what they have to say. So with that, I'm going to introduce Michael Shore, Sunil Kapoor, and I'm sorry, Sean Nabil is the other gentleman from Deloitte. Michael is a partner at Deloitte Risk and Financial Advisory Practices. He's got almost 20 years of experience focusing on providing a variety of risk and control services to the banking industry. He's also leading Deloitte's efforts around the modernization of the key defense functions. These include people, process, and technology, considerations that are required to keep pace with rapidly involving organizations to the emerging risks associated with these changes. Second is Sunil. Sunil is a managing director at Deloitte, and again, he's been our point person on our technological renaissance. You might recognize his voice or recognize his name if you attended last year's member symposium that we had. There were over 150 of you that attended, and he provided a presentation on the state of technology in the banking industry that was extremely well received by our members. He has spent more than 25 years leading initiatives in technology strategy, digital transformation, financial fraud, trade surveillance, cloud enabling, operational and compliance transformations. And then Sean is the Deloitte Senior Manager providing advisory services for financial service clients, concentrating in regulatory compliance for banking and lending operations. He has 15 years of experience in the financial services industry, focusing on the design and effectiveness of regulatory compliance programs, risk assessments, and operations. And with that, I believe I'll turn it over first to my friend who's been helping us a lot on the technology side from Deloitte. Sunil, you can take it away.
Thank you, Adam. Thank you for the wonderful introduction. Welcome, everybody, to today's presentation on PPP loans, addressing borrower forgiveness and future compliance considerations. Today, we will explore what lenders can expect in the forgiveness phase of the PPP loans, the challenges, and some approaches we are working on with our clients. We will specifically cover the timeline and context around the forgiveness phase, lessons we have learned from the recovery programs, the past recovery programs, and also the expectations one can have around the forgiveness phase. We will give you our perspective on the challenges one can expect with the loan forgiveness phase. We will also look at some operational considerations. And finally, we will introduce you to Deloitte's utility solution in this space, which may be very helpful and useful for a lot of banks and lenders in this area. Finally, we'll wrap up with a Q&A session, and hopefully we'll get some challenging questions from the audience here, because as I understand, our speakers, Mike Shore and Sean, love those kind of challenging questions. So without further ado, let's get up the poll. We'll go into a poll question, and typically we try to do this so that we make sure we understand our audience. And the question is, how many PPP loans has your institution processed? Option A is 0 to 500. Option B is 500 to 1,000. Option C is 1,000 to 2,500. Option D, 2,500 to 4,000. And the last option is more than 4,000. So if you can hit your appropriate choices on the screen, that will be helpful. And while you do that, I'm going to ask the question to one of our speakers here, Sean. Sean, maybe you can give a perspective on, like, for a typical lender, what does the average PPP loan portfolio look like in terms of number of loans and the average size of loans? Sean?
Yeah, thanks, Sunil. I think, like many of you on the phone, I'm pretty much married to the SBA Treasury side at this point. And they provide some very good information around the loan data that they're seeing out there. And so as of right now, there's over 5,300 lenders that have participated in the program. 511 billion of the allotted funds have been dispersed. And what's interesting is, 44% of those funds have been issued by banks of less than 10 billion in assets. 37% of that funding has been issued by lenders over 50 billion in assets. So a good dispersion there. And then the majority of loans at this point, about a little over 60%, have been in amounts of 50K or less. And the overall average at this stage is 114,000 per loan.
That's very interesting, Sean. Thanks for that insight. Let's look at the whole results. Oh, great. So we have 0 to 500, 66%, and then basically the remainder is 500 to 1,000, and up to 2,500. So that's interesting. Sean or Mike, anything unexpected here? According to me, I feel it's right on the mark. But would love to hear anything from your side, Sean, if you have any perspective to add.
No, I mean, I think that it seems aligned with what the group that is joining today. So yeah, it seems about right.
Great. Well, at this point, what I'm going to do is ask Sean actually to walk us through what is the current state of the overall Paycheck Protection Program. Over to you, Sean.
Great. Thank you, Sunil. So I won't spend a ton of time on this slide. I think the overall objective of the program, I believe, is well known by those of you on the phone today, which is primarily to support the small businesses that have been impacted by the global pandemic, enable them to retain their employees, keep their doors open, with limitations to serve their customer base, during stay-at-home orders and other restrictions that have come, at the state and federal level. The one thing is, the SBA has made it pretty clear that these loans are to serve those businesses with the greatest impact from the pandemic. And as a result, they have taken action throughout the program. It can be frustrating for those of us who have been in the program, but they're adjusting the rules, they're providing additional guidance, just to try to ensure that those objectives are met. There's been a couple key things that have come out of this. Again, trying to solidify the spirit of the program. And one of those items of particular focus has been those businesses that have received loans in excess of $2 million, really focusing on the need and ensuring that those businesses needed to utilize the PPP program to fulfill some of the funding needs that they had. They're going to continue that process through forgiveness, whether that be for the 2 million and above population, but any other loans that they feel are appropriate throughout the program timeline. And speaking of that, we can go to the next slide. I think all of you have seen the news overnight. This timeline that you see on the screen is no longer valid. We're going to see substantial changes come to this timeline and to this process as a result of the Senate passing the PPP Flexibility Act last night, and is on the desk of the president to sign. And I think I want to kind of shift what we were originally going to talk to and focus a little bit more on that at this point, and kind of go through some of the highlights of that bill. And there are significant changes. The first change I think that's of note is, they've extended the covered period from 8 weeks to 24 weeks. Obviously, this is going to allow borrowers, additional time to utilize their funds. I think, with states starting to open up, start to provide opportunities for serving their customer base, this will have an opportunity for them to use those funds, with bringing back employees and so forth. The one thing to note on that is that if you do have a borrower that is done, they've spent their money, they feel like they've exhausted the proceeds, they do have the opportunity to still come in at the 8 weeks. They don't have to wait till the end of the 24 weeks. The next large change is the ratio of payroll. So originally it was a 75% ratio payroll usage for use of proceeds. That's now reduced to 60. So that also could have implications. Going to a 60-40 split, there's more opportunity to utilize those funds on expenses. And and as well as lessens the impact on the payroll usage. For new loans issued for whenever the rules get finalized, the maturity date of those will go to 5 years from 2 years. So it gives additional opportunity for those people they're still trying to participate in the program or making decisions now that they want to participate. For the forgiveness application side of it, they now have 10 months to apply. That also extends the deferment period from 6 months to 10 months. But in addition to that deferment of up to 10 months, what it also does is the deferment is extended to the point in which SBA actually remits the funds to the lender. So this could end up resulting in excess of 12 months of total deferment during that process. The last major component is the extension of rehiring, as well as some relaxing of those requirements. So they're extending the rehiring from 6/30 to 12/31, and relaxing the requirements. There's a couple interesting components to that. One, if you're unable to return your staff levels due to COVID because of stay-at-home orders or other state restrictions, documenting that restriction will provide for opportunities to lessen any impact to the FTE portion of the calculation. Also, you have job posting component to this as well. If you had a job posting out, if the borrower had a job posting out and they weren't able to find qualified individuals, they didn't have takers, that also, if well documented, can eliminate the need for the FTE reduction component. So with all that being said, I think the key here is, to really implement and operate this program appropriately, the lenders need to establish, a well-structured, well-documented process to support the intake of the borrower applications, to review and evaluate the payroll and non-payroll related amounts in the application, to support in the supporting documentation, and really being able to, demonstrate those results both to the borrower as well as to the SBA. If this is not the first indication and origination is not our guide, this is not the last of the changes. There will be more to come. Obviously the SBA is going to be changing the IFR, the application, corresponding to this, but we'll see more and more changes as we go. So if we move to the next slide, we'd like to get a sense from the group what you all believe the biggest challenges the lenders will be faced with.
Yep, and the polling question number 2 is, what is the biggest challenge you anticipate having in managing loan forgiveness? Select one of the following: evolving rules and regulatory guidance, designing processes, operating model to manage the forgiveness, resource constraints, lack of available technology. The last one is managing fraud and legal risks. Obviously, we can see that the Senate passed the bill last night. Things changed pretty quickly and dramatically. But Mike, while the audience answers this question, I have a question for you. Can you talk to some of the challenges lenders faced during the initial phase of the PPP as they sought to meet the surge demand in the PPP loans, and how some of those lessons could be applied to the forgiveness phase? Mike?
Thanks, Sunil, and good morning, everyone. I think that if we had put up an all of the above option, a number of the folks on the call would have easily chosen that one, because the reality is, throughout the origination phase and now moving through forgiveness, more than one of these have been prevalent. Of course, there was the initial resource constraints associated with just being able to process the originations. In many cases, being able to stand up technology and then the operating model associated with that took some time. And of course, as rules have changed and as guidance has changed, the need to go back and rework everything that has already been done clearly played a big role in everything that was done. And all of those, as Sean mentioned just before, we'll talk about in a little more depth, are serving as lessons learned for everyone as we set up and start the loan forgiveness process.
Well, that's great, Mike. Thank you very much. If you can bring up the poll results, please. All right. Looks like the evolving rules and regulatory guidance takes the winner's seat here, 53%. Designing process, 30%. Resource constraints, 11%. And managing fraud and legal risks at 6%. I'm a little surprised about the available technology aspect, but Mike, do you have any comments on that?
We'll get to this a little bit later in the deck. We'll talk about kind of the different solutions that lenders are going after. And, I think that there are, a handful of technology players that are available to the marketplace and, a handful of different solutions that we'll get into a little bit more depth. So, even if not in-house technology, the availability of outside technology is reasonable at this point.
Okay, great. Well, I'll now ask Mike to share with us the lessons we have learned from some of the past recovery programs and the anticipated challenges with the loan forgiveness phase. Over to you, Mike.
Thank you very much. And, for those that don't know me, it wasn't necessarily mentioned in my bio, but throughout my 20-year career, I do focus very heavily on risk and controls and internal audit, all in the banking space. So the next topic is certainly something that's near and dear to my heart. Having experienced the financial crisis in 2008 and the fallout that came in a couple of years afterwards, one of the things that we're anticipating as part of this program is extensive scrutiny that'll come from regulators, Congress, legal field, and just really reputational risks that will be prevalent, even though there are a number of kind of hold harmless type rules within the legislation. So we know from our experience in the past that there were a number of lookbacks that were performed. We know that you all have internal audit departments that are going to want to make sure that everything is being processed correctly. And we know that, there will be negative news cycles because there has been already, even for all the great work that you as lenders have done. The headlines are about, certain people not being able to get money they want or, giving out money inappropriately. So one of the big things that we want to urge everyone on this call is as you stand up your operational process, make sure that you do everything you can to have an appropriate audit trail associated with all that you do going forward. It is my expectation that the easiest and best thing that we can do is have a package of information ready to go for each forgiveness calculation we do, so that when the scrutiny comes, we're prepared in that way. If we go to the next slide, we'll talk a little bit more about some broader kind of challenges that we see. There's certainly a lot of information on this page, but just to call out a couple and, to kind of echo a few things that Sean said, and I can almost guarantee that you all are feeling at this point, but there's just a complexity and a volume issue associated with this. I know that during the origination phase, people were very kind of forthcoming in trying to apply for the information. We expect that even though the legislation has passed to extend the forgiveness period, there will be a rush for the door when the forgiveness period opens, and we need to be prepared to handle that when it comes. The operational complexity associated with this is also something that is critical to think about. And again, not just a borrower coming in saying, this is what I believe my forgiveness amount should be, but all the different variables associated with FTEs coming back and different types of expenses, the variability associated with the documentation that they will provide in order to substantiate their claims, all of that really has a potential risk associated with it. I know in a previous polling question, there was a handful of folks who wrote fraud detection or exceptions associated with this. Again, even though there are hold harmless types of clauses throughout this, it is our fiduciary responsibility to make sure that where possible, we identify any potential anomalous activities. So being able to do things like, identify whether or not there's been multiple TINs associated with forgiveness claims or origination claims, things along those lines. Being able to identify falsified or fraudulent documents, not the expectation that we're all experts in those things, but certainly that we put due care in it. And then lastly, I'll talk about the reporting analytics, and this goes to what I was saying on the previous slide, that there are a number of requirements that we'll have to comply with going forward, that as much data as we can capture and as much documentation as we can retain will be critical as part of our future kind of requirements. But at the same time, there will be valuable information that we get that can help our business go forward and help us kind of better work with our borrowers and our customers on a long-term basis, so that we can strengthen our relationships and continue to help our community members. Let's go to the next slide. And
All
here
right,
we have next, Sunil.
Yep. Thank you, Mike. I think it's time for our last polling question here, guys. So the polling question is, what type of loan forgiveness solution are you considering? Select one of the following. In-house, we have the people and technology to manage it. Option B is third-party platform only. We have the people, we just need the technology. Option C is end-to-end solution. We plan to outsource the management to a third party. And the last two options are don't know and not applicable. So while the audience answers this question, Sean, maybe I can ask you to reflect a little bit on, your conversations with other lenders in the marketplace. What are some of the considerations they are thinking about as they weigh their options for tackling forgiveness? In-house versus licensing a platform or outsourcing the process entirely. Sean?
Yeah, thanks, So, yeah, I think, a lot of the challenges that Mike outlined, kind of go to some of the decision-making for the institutions that we've spoken with. Some have focused on the customer experience, and so they're really seeking a technology solution to help support the collection of the borrower application attributes and intake, documentation to help enable the back-end processing, where they typically feel like they have the resources to help support that. We've had others, that have technology in place that they've already built in-house, or they're leveraging, existing platforms, and they're really just looking for support from a resource perspective to help process all of these requirements, as well as helping them just to stand up the process overall. And then I think in a lot of the cases, we're getting into very deep dive discussions around the complexities, and it really ends up leading to, the banks really wanting to have a highly controlled end-to-end approach that both meets the customer expectations as well as the regulatory requirements. So it gives them that, in addition to that, gives them that agility in the process to be able to handle, a lot of the changes that they expect to come. So I think, those are kind of the different things that we've been having discussions on.
Yep. Thanks, Sean. Thanks for the perspective there. Let's look at the results here. So it looks like 41% are saying we're doing it in-house. We have the people and the technology to manage it. We also have the remaining, I would say, another 40%, which is saying we are using third-party platform or using some end-to-end solution by outsourcing it all together. That's a healthy mix, as I think at least I was expecting. Anything you want to add to that, Mike or Sean? Okay.
No, I think that it's kind of in line with what we would expect. I think particularly when you talk about the audience and a relatively low loan volume for, the first polling question that we saw, usually you could put your arms around something like that. But as the loan volume gets higher is where we start to see more of a need for, outside help to get things done.
Great. Well, thank you, Mike. I'm going to hand over to Sean now to take us through the considerations for operationalizing the forgiveness phase. Back to you, Sean.
Great. Thank you, Sunil. So you see a number of areas here, and we'll talk through some of these. I think to start, I think there's a couple aspects. One is this is a complex process for the borrower, not only just the lender side as well being equally as complex, but given that complexity, this is a high touch process. and it's going to be vital for the institutions to find ways to help reduce that high touch support, but also keeping that customer experience in a positive way. Another component is really looking at responsibilities as the way the requirements have laid this out. Trying to not cross over. This is, at the end of the day, the borrower is required to make these calculations. They are required to, submit this information and enable that certification or certifications, as well as enabling the lender to fulfill their responsibilities in having some reasonable assurance of the numbers that were calculated by the borrower. It's not the role of the bank to be the calculator. So ensuring that you kind of manage those responsibilities. And then lastly is the borrower really here is, from a lender perspective, validating the efforts related to the borrower completing the application of the rule and the requirements. Trying to, do what you need to do as a lender to gain that assurance and demonstrate you did a good faith review without overstepping those bounds. Now, when we look into some of these components and that related to those kind of three, broader topics, the customer engagement, this is like I said, it's going to be difficult for them. So helping them in the front end, helping to educate them about your process, how you're going to support them, what the expectations are from a documentation perspective, any support material that you can go through. Be detailed and deliberate in your documentation of your process. I think it's critical that you have that well documented to be able to present that to others. And then I think quality is another area that's probably of high importance. Making sure that through your process you're managing the quality of the review, having the controls in place to mitigate that, either through establishing automation in your process, but then evaluating that on the back end through some quality mechanisms. I know we're getting close to the end here, so I'm going to kind of stop here so that we can have an opportunity to, I think we've talked around a lot of these other topics, but want to make sure we get some time for Q&A.
Thanks, Sean. And before we get to Q&A, I'll just provide a bit of an overview of the utility solution that we have created. And first and foremost, a couple of the reasons why we did this. Again, going back to the first polling question where you see the demographics of you all on this call and recognizing that the loan volume is relatively low as compared to some of the really large players, and knowing that this is a one-off activity that will happen over a period of months and then, kind of end after that, but knowing how important it is to get it right the first time and every single time we did it, we wanted to provide a utility solution to provide end-to-end kind of processing of all information so that, one, you as a lender would not have to expend too much energy in terms of getting this up and running and setting up your customers. Two, your customers, the borrowers, have as easy an interface as possible and as much technology available to them, guidance available to them to ease the burden that Sean just talked about before. And three, make sure that there is consistent application using the most recent software, everything that Sean has explained to you that he's evaluating on a real-time basis embedded, so that at the end of the day, when the scrutiny does come, we don't just say that we did this correctly, we can also say that we did this the exact same way as every other small lender that was on this platform, which gives us additional defensibility when the time comes. In short, the utility itself is consisting of three different things. The first, on the left-hand side, the forgiveness management engine. We are providing a technology platform where your customers will get a link directly to our platform. We have an easy-to-use and integrated technology platform that can be branded for your organization, that provides FAQs, that provides guided tours again, in an effort to make the information entering phase and documentation upload phase as easy as possible for your borrowers. We provide the ability to collect documentation digitally to support all the claims that they have, and have a workflow process whereby our processors can manage through the review and approval process, and your relationship managers can, in real time, access to figure out where individual forgiveness claims are. On the right-hand side of the page, you'll see some of the embedded technology that we have. Fraud detection, as we discussed before, is going to be really important, particularly in the most obvious cases. We will provide the data that will be provided back to you as the lenders for everything that is required for your books and records and for the ongoing servicing of amounts that were not forgiven. And we will provide the information directly to the SBA that they can update their records for a clean and easy audit trail. And lastly, we'll have general reporting back to you that will enable you to look through all the demographics and analyze data as necessary. The last thing you see on the bottom is, of course, the middle part, the arms and legs, literally of individuals, Deloitte professionals that will be trained on the operational processing that Sean described and that he's built and constantly evolving on, as well as some technology support where possible for things like automation or optical character recognition to support the process. If we go to the next stage, and again, we're going to save some time for questions here. I want to be very clear on something, and that's what's on the bottom half of the page here. Our objective for this is to allow you as the lenders to do this in the best way possible while enabling all of your professionals to do what it is they're required to do all day, every day, basically their day jobs. We are literally asking for you to provide to us a flat file of all the origination information that you have and a template that we provide to you. So really just an extract out of the system that you already use. We're going to provide to you an email template communication to get out to all of your customers to make them aware of this platform and how to get it, as well as customized links that you can put on your website for them to come to the platform. That's it. From a borrower perspective, they will have to insert information on fields that are made available to them and that are straightforward and match the worksheet that has been provided. I should say the application form, not the worksheet that has been provided. And they will upload any related documentation that there is. In the extent that there's any potential fraud or anything that is sensitive in nature having to do with the customer, we will engage you as a lender for the client relationship aspect of it. And that's it. The utility is going to do everything else. So if we go to the next slide, just to really kind of drive home a couple of what we see as the value drivers here. The consistent approach with your peer institutions that helps with not just making sure that we're using the most up-to-date kind of requirements, guidance, and all that stuff, but also the defensibility of larger groups doing things the same way. The ability to detect fraud up front, the ability to collect required data elements, report to the regulators, report to you, and ultimately enable us all collectively to better serve the public, keep them focused on getting back to work and getting the things they need to be doing, while your resources can also focus on their day jobs, is really the ultimate objective of what we've done here. The last thing, well, I guess with that, I will pause. And Adam, I will hand back to you for 5 minutes, 5 minutes left.
Perfect. Okay, thank you very much. That was an amazing presentation, chock full of great data in a short period of time. We have, speaking of short period of time, we have about 5 minutes left. I think there's some questions in the question bank. While you all think about any other questions you might want to ask the Deloitte team, let me, if people don't mind, I'm going to ask you guys a couple questions that are on my mind, and I'll split the time. From a risk and control kind of perspective, what are some of the risk and control considerations that lenders or members should be thinking about in standing up the forgiveness program? Maybe Mike, I don't know, it sounds like it's your wheelhouse, but whoever wants to grab it.
Yeah, no, I'll take that, and it is near and dear to my heart. So first of all, making sure that everything is prepared in a way so that audit trail I described before is available at the end of the day is going to be critically important. So, working with your control functions, whether it's compliance, whether it's internal audit, or just control-minded or people, to know that the process is set up in a sustainable way is really important. And then I also think at the beginning, just making sure that we do kind of the basic fraud elements to make sure that we don't get ourselves in trouble would be two of the biggest focus areas, I'd say.
Okay, let me move over to due diligence and fraud for a second. What expectations do members have for performing due diligence and identifying fraud, like the fraudulent claims that we mentioned? Sounds like Sean's wheelhouse, but whoever wants to grab it.
Yes, take that one. So, I mean, the way that we've interpreted the requirements, both from the IFR and then the 3508, we're really focusing on supporting doc review from the payroll and non-payroll, so that you can, in essence, verify, the amounts that they claimed on the application. I think there is absolutely an open opportunity to create tolerances associated with that. We don't expect that there's going to be a capability to really get down to the dollar, on both the amount from the supporting documentation as well as the amount paid. I think the amount paid is going to be the more challenging side of this. But structuring that process to enable that review. There's additional aspects to that too. I mean, you're going to have ongoing communication, discussion with the borrower, because you're going to identify variances and being able to manage that, as well as messaging with the SBA and so forth. In terms of anomaly review, I think Mike touched on a couple of those. I think it's really working with your internal fraud departments and understanding where you want to focus your attention. I think that the documentation side, as well as any duplicative applications and things of that nature, that you want to try to capture.
Okay. Let me move to some of the attendee questions right now. By the way, one of the attendees said that the SBA website is down. Do you know of any issue that they're having, or that might be that might just be based on volume from this call because everyone's interested? But note to everybody. I don't know whoever the attendee was that said that. I hope the SBA gets that up and running. So a question from the audience is, the forgiveness worksheet is extremely convoluted. Do you expect a revision to the worksheet?
This is Sean. I can start there. I do not believe that they're going to be adjusting the worksheet based on it. They're going to adjust it from the perspective of the new guidance relative to the 60% versus 75%. But at this stage, I don't believe that they will be changing the comprehensive aspects of the application and the related worksheets that are required.
Okay.
Could be wrong.
We are running into the issue of how we document payroll for independent contractors and sole proprietors. Any color on that?
So really, this drives down to owner's comp, and so you would utilize the same information, quite honestly, that you use on the upfront application process in terms of taking their 2019 results from their Schedule C and determining the 8-week portion. Now, obviously, with this new change to the 24-week, I don't know how that's going to impact that yet until the rules come out. But really, it was the leveraging that owner comp related requirements to care for that.
Okay. Someone wants to know what the deadline is for our members to apply for PPP. Actually, you know what I mean, the small businesses to apply for PPP.
For forgiveness or for the origination? Yeah, I can kind of care for both. I believe I have to check on the rule, but I believe it's still supposed to go until December. The program itself is allowed to go through December. If the funds aren't exhausted by then, they should be able to go till that time frame.
That's right. I think that was part of the bill from last night. It extended the PPP time frame to the end of the calendar year.
Right.
Okay, great. The last question, and you might have a solution to this one, and it's one of my favorites because I love a good summary. where is the best place to get a good recap of the new flexible rules that came out last night? I'm sure you guys were cranking it out overnight, but what's any sources, any of your favorites, or did Deloitte put anything out, or will you be, where our members might be able to access it?
Yeah, we will be working on a summary. Honestly, I haven't had a chance this morning to look at some of the law firms and what's been put out so far. But we will be developing a summary that should be available.
I would also say,
well, for the members that
if you search for HR 7010, there is about a 10-page act document out there. That it's only 10 pages, so at least that's something digestible.
Okay, and if you conclude that and ship it to us, we will attach it to the webinar documentation so our members can access it when they click on the link on our website. We'd be happy to send that off to our members after you complete it. That's all the questions we have. We're just a couple minutes over, so sorry for the abrupt closing, but I think we should end it here. Again, we want to respect your time. We do greatly appreciate all of you spending this 45 minutes with us. We hope you are enjoying this webinar series. Next week, backed by popular demand, our financial economist will be presenting, and the title is Looking for the Light at the End of the Tunnel, where Brian Jones will be providing an update on the economic landscape and a look at what's to come. So until then, I hope everybody stays happy and healthy, and we will get through this together. Have a great rest of the day, and thank you again for participating. And thank you to the folks from the Deloitte team for joining us and spending some time with our members. We really appreciate it. Have a good day, everybody.